The first home loan deposit scheme is set for a massive increase this year, with over $100,000 in some cities and the coalition targeting first home buyers in this year's election. So we're going to go through the pros, the cons, and what you need to know, all the changes that are proposed to the first home loan deposit scheme, and if you're going to be eligible. Let's dive in. So Nathan, starting from the top, we've got some of the changes. It's been announced by the coalition, so the Liberal government. If they get re-elected in this year's election, they've announced an expansion of the first home loan deposit scheme. So some pretty huge changes. As you can see here in New South Wales, Victoria, pretty much everywhere except for ACT is going to get a $100,000 increase to the price caps in most of the city centres. So interestingly, they're even doing it for the regional areas. So in Sydney, instead of the $800,000 price cap that we've currently got, it's going to be $900,000. Melbourne up to $800,000 in Metro, $650 for rest of the state. Queensland $700,000. So it's going to make some huge differences. Like I know you've had a couple of clients that have been priced out. The cap's a pretty hard cap at the moment. Like in Queensland, for example, if the house is over $601,000, you don't qualify for the scheme. What are you sort of finding, Nathan?
Yeah, I think this is going to be a huge change. Let's remember, this is only proposed at the moment by the coalition. If they do get re-elected, it will be something that will be put into place with a $100,000 increase. Labor yet to reply in terms of what they're going to do on this space, but it's good changes, good commitments all around from what we're seeing. And it's quite exciting. We've also seen a larger increase in the number of spots that will be available, and the spots are set to be released from 1 July this year. So I think there's some really great changes. We saw at the start of this year in February, they released 10,000 new spots in the scheme, and unfortunately they were taken up quite quickly. So with the larger number, it'll be interesting to see how much longer it'll last, given that the price caps are likely to increase as well.
Yeah, so I guess in this video, let's go through a couple of pros and cons, because it's not all green skies. When we saw the last first home loan, first home owners grant scheme, it originally got announced in the early 2000s, actually ended up pushing up prices. So I guess that's definitely a con. But Nathan, walk us through some of these pros and cons, and why it's actually a good thing and why it's actually sometimes a negative thing as well.
Yeah, look, this is something to keep in mind because, the first home loan deposit scheme is something we've talked about a lot. We've not really looked at the pros and cons of each, and this is what we really want to dive into. CoreLogic actually released an awesome report where they went through the pros and cons of the scheme. And, looking at some of the points that they've raised here, they make a lot of sense. So one of the biggest pros is that it actually cuts down the time in which it takes you to save your deposit. Nearly by a quarter. So in terms of saving a 5% deposit over a 20% deposit, they're saying it'll save you anywhere from that 2.3 years of the medium time to save for a 5% deposit compared to a 20% deposit that'd take you 8.8 years. So that's a big difference when you look at it in the grand scheme of things, how much we've seen the property market change really in the last 12 to 18 months. That ability to really cut down the time it takes to save your deposit is a huge benefit, and one we feel makes a massive amount of sense if you do qualify for this scheme. Yeah. Now, one of the cons here is higher interest costs. Now, because you are going to have a higher loan amount with a lower deposit, it roughly means that in an example on a purchase, let's say that you went around that 690,000 mark for a loan amount with a 5% deposit. As we can see here in the same example, you're going to be spending almost $232,000 of interest when you put down a lesser deposit as compared to putting down a 20% deposit on the same purchase price, $196,000 instead. I actually don't think this is a con, to be honest, because look, if you're only paying 40 grand more in interest to get in the market, in a quarter of the time, instead of taking 8.8 years to save a deposit, it taking 2.3 years and getting that price growth, I think 40 grand isn't a bad thing in the grand scheme of things. It is a con. Yes, you are paying more interest, but I think when we look at it at a high level, it makes a lot of sense. Jaden, what are your thoughts on this one here?
Yeah, I think, as always, if you look at some of the growth over the market over the last few years and even average over the last 30 years, this cost will be pretty relevant, even if you're getting 2-3% growth per annum on your property. So I think it's a bit of it's something to consider, but like it's not probably a consideration for a lot of people. Pro, more than 1 in 3 established properties qualify, sort of based on some of those increased price caps, which is true. Like it's definitely helped. I think definitely a con at the same time is that not all prices are easy to determine, and even there's still not a lot of, it doesn't, with all the increasing property prices across Australia after the latest kind of boom, $700,000 in Brisbane, for example, still can get your house undoubtedly, but it would have been nice if they could have expanded a bit higher to sort of allow, and even in Sydney and Melbourne, knowing what the market's like there, like it still doesn't give full coverage for what first home buyers are having to pay these days. And it's just kind of the reality of the market at the moment. If you want to buy a house sort of in a city, you're going to end up spending a bit more than that. So I think that's...
And I think another thing to add, Jaden, there is, yes, whilst the price caps have increased, I think one of the biggest challenges is here, the income caps haven't increased. So, in Sydney and Melbourne, where the price caps have increased, I mean, qualifying for a loan can be quite challenging, especially when they're limiting the price caps for your income, being for a single applicant, your income can't be over 125,000. Well, unfortunately, your borrowing power on that sort of income, if you do have a car loan or any other liabilities, will limit your ability to get to that higher end. Same with a couple, price cap limiting to $200,000. So I think whilst it's definitely a pro that you've got more coverage in that you qualify for 1 in 3 properties that are established that you will qualify with, it is a huge con that whilst the price caps have increased, the income price caps haven't increased. So that's one we see as quite detrimental. And really the last point on that, and the biggest con I see with this scheme, is that it isn't that inclusive for anyone that isn't an Australian citizen. So if you're a permanent resident, you're working, you're paying your taxes, unfortunately, you don't really qualify for this scheme, which I think is the biggest challenge with this, that you both have to be Australian citizens if you're a couple going for it, or if you're an individual, once again, having to be an Australian citizen with your tax returns lodged for the most recent financial year.
Yeah. And, on that point with the tax returns, obviously the scheme's set to reset on the 1st of July this year. So the next month or two, that's going to be a really tricky one. I know it was a challenging point last year when people tried to buy a home around the 1st of July. It was really exciting. You get a contract. Yep, I'm finally getting a spot. But remember that you need to have your notice of assessment. So you need to have completed your tax return, needs to have lodged and been returned. Like you actually have to pay it, notice and return, before you can actually get one of these scheme spots. So the reality is, if you sign a contract on and around the 1st of July, you probably need to wait at least 2 weeks for the finance to be able to make that happen, because otherwise you're not going to get notice assessment back. It takes a week or two from the Australian tax office. And it's just something to consider. And like you said, Nathan, I guess where I've also seen some people get even come up short is you might have a base salary of 100,000 then plus a bit of overtime. If you're $1 over 125,000 as an individual, you don't qualify for the scheme. So it's definitely like really awesome. I think it's going to enable a lot of first home buyers to get in the market, but you just need to be careful on some of those points, especially around citizenship. And even if you've got a partner and you're looking at buying together, you might not be eligible.
And I think the last con I wanted to talk on, Jaden, before we conclude for today, is the fact that the lenders do still have limitations on inner city apartments. So if you are looking at inner city apartments, some lenders are still limiting the lend not to 95%, which is what the scheme's designed for, to 90%. So that is a big shame, because a lot of these areas, in terms of affordability, we are finding inner city apartments are meeting those price cap limits, but you are needing a larger deposit, which is hugely detrimental to be able to get success in being able to get in the market with a minimal deposit. So that's pretty much it that's it from us today, guys. Did you know here at Hunter Galloway, we work with home buyers around Australia. So if you're looking for a mortgage broker and needing assistance, hit us up at huntergalloway.com.au or call us on 1300 088 065, and we'll see you next time.